Gary Kalpam joins us now. Michelle Schneider with us as well. Michelle, if something goes very, very wrong on the progress we're making with COVID and these spikes in Asia really gain traction, would it be a worry for the markets? I mean, you hope that obviously these cases are not leading to a spike in deaths or even serious cases. I want to stress that. But we are seeing spikes just the same. And for markets that have been sort of the view that this is short-lived and everything's going okay, then what?
Well, I definitely think that there's a concern, of course, not just the toll on humans and the whole country and the economic growth and the demand that we expect to explode from Asia at some point, but also, obviously, from the market's perspective. However, we do know so much more about COVID, even with these variants coming out, that it should be relatively, I won't say easy, but definitely amenable to deal with it with a rollout of more vaccines. They've been slow in getting the vaccine, which is interesting considering they were at the lead not too long ago. And so I would actually say what's so great about the market is that the market already priced in the concerns. And actually, as we're speaking today, it looks like a lot of the China stocks, including the FXI, which is the ETF for China, is bouncing off of these lows and could be actually bottoming out because we're very hopeful and optimistic that this can be dealt with. Unless something hits us that's so bizarre, at this point, I would think that it'll be a slow process, but it'll actually get better.
On that notion, Gary, she's quite right. If the markets were worried about any of these, and of course we were thinking yesterday in the middle of that downdraft, maybe they were starting to take it, and realize maybe you should worry about it. But overall, given the comeback today, overall, given all the market averages are in positive territory on the week and have resisted the inflation concerns, fought off even the growing friction with China concerns, the slowdown concerns, they're ignoring it, as is the bond market. And I'm wondering, do you buy that? Are the markets right about this?
I think as of this second, yes, but very selectively. I am so bullish on technology and the NASDAQ right now, Neil. Just very strong and strong earnings to come. I'm not so sure about the opening up trade that we're talking about, even though they're having a strong day today. Travel-related stocks have been in trouble. Economically sensitive stocks have been in trouble. So I do think there's a little bit of that COVID component, and I read all the news on COVID around the globe. There's a lot of countries that have not vaccinated their people, and right. That's a potential effect going forward. And there's always that one little word called unknown when you're dealing with something like this. And I think markets have one eye open to what could go wrong. The good news is major indices are a stone's throw away from the old highs. Even the worst areas are only corrected, 7, 8, 9, 10%, which is normal correction. So I'm okay with the market right here. But as I stated, en fuego when it comes to technology and growth stocks right now. And as long as interest rates cooperate, and I think they will because Master Powell is doing his thing, I think they're going to keep going into earnings.
Do you think, Michelle, that Jerome Powell should be reappointed to the Fed to head it up for another 4 years? We're getting close to that decision time for the president. What do you think?
Well, I actually think, just to sort of jump on what Gary said, that he's doing as good a job as anyone could possibly do in a very, very tough situation. He guided us through COVID. He certainly has been keeping a steady hand, even with the market and particularly the growth stocks making new highs. And so he also seems to be somewhat of a voice of reason when you listen to the other people in the Federal Reserve, as some become very hawkish and some become even more dovish. He sort of stays in the middle. So at this point, I'm kind of rooting for him to stay. Also, I don't know if we can necessarily handle an upset of a whole new regime in the Federal Reserve, given the tenuous situation, like Gary just said, where we have some of the market really doing well and others still struggling. We need this steady hand right here.
You agree with that, Gary?
In order, I like root canal better than I like the Fed and Jerome Powell. And look, again, I so worry that the printing of trillions of dollars and rigging interest rates down to zero has enabled massive leverage and debt in the system. And I believe there's going to be an expiration date in the next year or two where the markets as well as the economy react to such. Neil, we talk about it not enough. We do talk about it. The amount of debt in the system is just gargantuan, and I know they think they're heroes and they're doing a great job of things, but there's got to be heck to pay. Economics 101 states the more debt you have, the more interest you have to pay, yet junk bond yields are at their all-time lows, and I just think the distortions are out there, and I hope I'm wrong about this whole thing.
All right, I'll put you down as a maybe then on Jerome Powell. Guys, don't walk too far because I do want to address what's going on in technology stocks because to Gary, to your point, that they're very resistant to all these clamping down efforts on the part of the administration today and Congress, but that's for a little later. In the meantime, I want to bring you up to date right now on some moves on